Adding loan payments incorrectly in QuickBooks Online is the most common mistake I see people do when I'm evaluating their books. So in today's video, I'm going to teach you how to properly enter loan payments in QuickBooks Online. So if you're interested, keep on watching. Hi, and welcome back to my channel. We are passionate about helping people with business and accounting. Today's video was requested by Brad Pierce. He asks how to correctly write checks to pay EIDL back. This is a great question, and the reason why I wanted to do this video is because there are so many business owners right now getting loans, and one of the common mistakes I see all the time are loans not being properly recorded. So if you have a loan and you have an entry on your P&L called credit card payment or truck payment or loan payment, that is not correct. And so today I'm going to teach you how to properly enter any type of debt that you have to the business in QuickBooks Online. So let's get into the video. So before we get into QuickBooks, I want to show you guys something real quick. For every loan that my clients have, I like to create a loan table to track the interest and the principal payments. So let's go into Excel and I'll show you guys what I like to do. And it's basically just a template. So our loan amount that we received from the SBA was $30,000. So I plugged that number there. The interest rate is 3.75%. The loan terms are 30 years, 12 months. The start of the loan, I'll just say it's July 1st. And this will populate my payment. So my payment is going to be around $138.93. I usually don't do this until I receive my first statement. That way I can make sure that my loan terms match the loan terms on our promissory note and our first payment. So I like to tie everything together. But once I've received that information, I go into Excel and make a loan amortization table. And the reason why is because that way I don't have to wait for my statement to come in. You can also get this information off your first statement. So if you want to wait till you get your statement, that's perfectly fine. But for purposes of this video, I don't have a statement, so I needed to create this table. So now that I have my loan payment amount, let's go ahead and enter the expense in QuickBooks. The first thing you want to do is you want to make sure that your loan has been set up properly in QuickBooks. Let's head over to QuickBooks, go to accounting, select your chart of accounts, and let's take a look at the loan. So purposes of this video, I'm going to use the EIDL loan as the example. So on July 1st, we received $30,000 from the SBA. So that has been properly recorded on our liability register. And now we want to go ahead and enter our expense. So we're going to select our payee to be the SBA. The money is going to come out of our checking account. Pay date is going to be 7/1. The category is going to be EIDL loan, and this is going to be the entry for the principal amount. So in the description, we're going to write in July payment, EIDL, and then I do the payment and then the total amount, which was $138.93. The principal amount is $45.18. I'm going to copy the description over from line 1, and then I'm going to put in the interest amount, which was $93.75. Our reference number, I'm just going to put in July PMT, which is abbreviated for payment. And then for this example, I'm going to say that we paid this on our Visa card. Save and close. And now if we go back to the EIDL register, we'll see that our payment is decreasing our balance by $45.18. So it's important to stop here and talk about this real quick. The reason why we have to split that payment amount is because one entry is going to affect our balance sheet and the other entry is going to affect our P&L statement. The most common mistake I see people do is have one entry for the full amount. So let's do another example. This time we're going to cut a check. So we're going to cut it to the SBA. This is going to be our August payment. It's going to be check number 71. We'll go ahead and split it the same exact way. So we want the EIDL loan to account for the principal. So we're just going to type in August payment. I'm going to jump over to the loan table, grab our amount of $138.93. And now we need our principal and interest payment breakdown. So $45.33 is going to be applied to principal. And then we select our interest expense account, same information, copy and paste. And then we're going to enter our interest, $93.61. That is going to throw us off. So in Excel, you're going to see rounding errors by a cent on some of these payments. I'd usually just reduce the interest amount and then it will match. So instead of $93.61, I changed it to $93.60. Our amount, our loan payment amount matches, and voila. Now we have the two types of expenses. It doesn't matter how you pay this, as long as you break down the interest and the principal, then you are accounting for this correctly. And if we head over to our register, we can see that our spreadsheet matches the amortization table. And if we go to our checking register, we'll see that our two payments are on there for the $138.93. So let's head over to our reports. Let's pull a profit and loss statement. I'm going to edit this real quick to the view that I like. So I like to see my P&Ls by month. And if we scroll down to the bottom, we'll find our interest expense for $93.75. If I expand my dates to go through August, we'll be able to see both payments. So the only portion that you should see on your P&L is the interest portion of that payment. So now let's go over to our balance sheet. We'll click on that register. So we'll find EIDL loan. There's our balance. If we click on that, we'll see our $30,000 of money that we received. I'll change my dates here, and now we'll see the two principal payments. And really quickly, if you look at my description, that's why I like to add in the total amount. So when a client has a question, well, why is it only $45? Why, I pay $138.93 on this loan. That way I can quickly look at it and say, oh, okay, because a portion of it is principal and the portion of it is interest. Now, if you're struggling in how to get the EIDL loan properly set up in QuickBooks Online, I have a video specifically on that. It's my EIDL bookkeeping video. So check that out. I'm going to link it up above. That way you can properly set up these accounts before you start paying this loan. I hope you found this video helpful. If you did, please give it a like. Subscribe to the channel if you haven't, share it with a friend, and I will see you in the next one. Bye.